In my very, 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 very long career in this, formulas, indicators are a whole lot smarter than I am. And the indication is because it's where unemployment meets high debt payments. And we already know that the delinquencies have been rising. And that's showing us that there is a crisis ahead, not in the very distant future. It can become obvious any moment. So what happened last week? Dip buying. They wanted you to think that everything is just fine. And look at these markets, woohoo, rock and roll. But it's not true. Don't believe their lies. Because how many times can you be lied to when you do not know the truth? Every single time. But I'm going to tell you one thing I've learned.
Welcome to another latest and crucial video of Lynette Zang. The next level of recession isn't just coming, it's already here. While the official call hasn't been made, Lynette is here to reveal the undeniable signs that we're entering a dangerous phase, possibly leading to a hyperinflationary depression. With rising unemployment and surging debt, the cracks are widening. Delinquencies are up, signaling that a financial crisis could strike at any moment. Don't be fooled by last week's market dip buying. It's just an illusion. The truth? This recession is bigger and more dangerous than we've seen before. Stay with Lynette as she breaks down what this means for your money and how you can prepare for what's ahead.
So, Wall Street wants you to think that everything is over, that there is a soft landing, that the crisis has been averted. Except I'm sitting here telling you, do not be lulled into a false sense of security. And it's never been more important for you to be in place because another recession warning, but this is going to be so much bigger than just a recession, has recently been triggered. Let's talk about the sham rule. First, let's look at the longest inversion in history of the 2 and the 10. And even though last week we saw a couple of very brief reversions, let me tell you, this ain't over yet, but it is a warning that we are very, very close. Though that's what that actually means. Now, the interesting thing is before a recession, that's when you see the index drop, the 10-year minus the 2-year treasury. That's when you see it before. These gray lines are official recessions. And even though you may feel we're in a recession, officially, they get to determine exactly what that looks like. So this is the 2 and 10-year inversion that we've been talking about for a couple of years. And it is the longest inversion in history. And that was only kind of looks like what it did back in the 80s as we were transitioning into a new monetary system. It's so critical that you understand that we have now come full circle, except that we are on the other side going into a completely different economic, social, and financial system. So this is way bigger than it was back in 1971 to the 80s. But let's continue on because I need to show you this trigger. And this is the sham rule, and it is a recession indicator that has done it 100% of the time. But you can see the rise in the jobless rate last month triggered the so-called sham rule, a historically accurate early indicator of recession that says such a downturn is underway. So it's already underway. When the 3-month moving average of the employment rate rises 0.5 percentage point above its low from the previous 12 months. So let me show you what that looks like because we can go back to March. You can go all the way back if you want to on the sham rule. Just go to Fred and you can just click on the link that says more data. But you can see what's happened since March where it has steadily been rising, which is what it does before every recession. Remember, these gray bars are official recessions. So what does that look like? Well, 0.53 triggers that rule, and that was issued in July. These peak after. So what this is really telling us is that we have already begun to enter the next level of recession. Now remember, an official recession is called. So they cannot call it for a while until we are deeply in it. But this basically tells us that the recession has already begun. And what we're actually looking at here, it indicates that we have now entered the next phase in this trend toward a hyperinflationary depression, because it's where unemployment meets high debt payments. And we already know that the delinquencies have been rising, and that's showing us that there is a crisis ahead, not in the very distant future. It can become obvious any moment. So what happened last week? Dip buying. They wanted you to think that everything is just fine. And look at these markets. Woo, rock and roll. But it's not true. Don't believe their lies. Because how many times can you be lied to when you do not know the truth? Every single time. But I'm going to tell you one thing I've learned in my very, 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 very long career in this. Formulas, indicators are a whole lot smarter than I am. And the indication is for this next recession has already begun. But again, this is way bigger than just a recession. So you better have your physical gold, your physical silver. You better have your strategy, your sound money strategy, and your plan in place. And it needs to include food, water, energy, security, barterability, wealth preservation, community, and shelter. And the foundation has to be in sound money. And you know why it's easy to say that? Because that's also what the central bankers are doing. And who knows more about how they're driving the economy into this next crisis than they do? So hey, central bank gold demand in H1, so that's the first half of this year, was the highest on record. What do you think? Are you ready for what we're about to have to deal with? Everything is telling us what's happening. Believe it. Believe it. And until next we meet, I 100% know that we can make a positive difference if we come together in community, locally and globally. Let's do that while there's still time. And until next we meet, please be safe out there. Bye-bye.
Thanks for watching, everyone. If you found this video helpful, make sure to give it a thumbs up and share it with others who need to stay informed. Don't forget to subscribe and hit that notification bell so you never miss an update from Lynette Zang. Stay prepared, stay informed, and as always, keep your assets strong. Until next time, take care.